Good morning, one and all. Today we are going to see about the topic on operational planning of GENCOs in the restructured power market. So, in this restructured power system, this generation companies is playing a very important role because without the generation companies, we can't able to produce the power and say for supplying the power because GENCO is playing an important role. So now today we are going to see what are the main role of GENCOs, generation companies in the restructured power market, how they are planning for their future. So in the restructured power market, mm, the main objective of the GENCOs is to maximize the profit. Okay, so because why they need to maximize the profit, because then only they can survive in the market. Okay, because say for example any business, okay, any business you are doing, definitely you'll expect some profit. Without the profit, no one can do the business in the today's world. So similarly to this, GENCOs also, the main aim of the GENCOs is to make the profit and not to maintain the system reliability. So that is say for example, that is the role of this independent system operator role. Okay, so main objective of the ISO is to maintain the reliability and security. Okay, security and reliability of the particular restructured market. So GENCO's role is to generate the power and main aim is to make the profit. So how they are achieving this? So GENCOs plan their operation across the different time horizons. Say for example, from the years ahead to the real time. So one day. A day ahead market. If you take day ahead market, what is the tomorrow's load? Based on that, today itself they'll plan for the all the like resources. Based on that, they will generate and to the real time. Say for example, spot market. If you take the spot market, in that particular time they need to generate. Say for example, this time to this time they need to generate, so that also they need to plan. And our, say for example, year ahead also, future, as I said in the previous class, they need to plan for the future time also, that also they need to plan. Next, all about the long and medium term planning. Say for example, years ahead. So long term planning, 1 year or some 2 years, 5 years, what might be the increasing load, that also they need to taken care of. Next, expansion planning. So expansion planning is, say for example, if they are owning some 100 megawatt generator, how to expand that for 200 megawatt. So what are the things they need to build? Okay, like infrastructure they need to develop like that. Okay, the hits they need to make like that. So this expansion plan decide whether to build a new power plants or not. So considering the demand growth, say for example, if the demand is very less, that area you can't able to plan for expansion plan. If the demand is more, that area you need to concentrate more. And also fuel price trends. Say for example, if you take diesel generators and all, fuel price will be increasing, so that you need to find some other alternative. Say for example, renewable energy resource, such that the consumers has to get very less power. Next is a long term marketplace. So they need to decide for the long term. Say for example, what might be the next year's tariff, what how can we increase the tariff to some other something, because based on the economic growth or something, they need to plan. So the main aim of this expansion planning is to ensure the future profits. Okay, so future, what will be the tariff we can set and what might be our profit, that also they need to plan. And also to meet the long term market opportunities. So market, so you need to survive in the long term market, means definitely you need to reduce the price with the decreased profit. You need to expect some decreased profit, as they did in mobile phone markets. Mobile phone markets, first they given 1 year free scheme, so everyone joined in a particular network. So after that, whatever they set, that is the tariff. So because other companies might be in the loss, So whatever the tariff they set, other mobile companies also forced to increase their tariff. So that is also the long-term market opportunities also there. Next is maintenance scheduling. Say for example, they need to plan for the maintenance. Say for example, outages is there. So what might be the generators? Say for example, if you take a 100 megawatt hydro generators, there will be not only one generators will be there. There will be some set of two or three generators will be there. Say for example, generator one is get failure, means they need to go for the generator two, they need to go generator four, three, like that. Why? Because if you depend on only one generator, suddenly fault happens, you can't able to manage at that time. So you need to go for that future scope also, and also outage. Say for example, for maintenance, you need to say plan for the outage planning also. Next is balance the plant health with the market opportunities. So you need to see the market growth, that means demand growth, power demand growth. Based on that, you need to go for this opportunities also. Next is maintenance is usually planned during the low price season. So whenever the tariff gets less, whenever the users are very very less, that time they can go for maintenance. So if they plan for the maintenance in the peak time period, then they won't get the profit also. That is also they need to maintain. Next is all about the risk hedging and finance trading. So they need to time the long term bilateral contracts from 1 year, 2 years, or 5 years, like that. Bilateral contracts, already we have discussed enough about the this, how the contract is being made in the bilateral contracts market. That enough discussion is there. So that class is also there, that you can watch and you can learn this. Next is the use of financial tools. Say for example, nowadays they are using the AI tools for finding out the future growths and future demand. So what might be the price increase, how to reduce that price, everything they are forecasting now itself. Next, which helps to stabilize the revenue, and even the market price can also fluctuate. So, if you plan for the future growth and all, you can set this market price in some base amount. Say for example, 5 rupees you are setting. Sometimes you are increasing to 5 rupees 50 paise. Sometimes you are decreasing to 4 rupees 50. So like that, you can maintain this market price in the some base tariff, and you should not make this market price to fluctuate always. That is also you need to taken care of. Next is a short-term planning. Short-term planning comes the weeks to day ahead. So in this short-term planning, this prepares the GENCOs to participate in the next day market. Okay, short-term planning. So this short-term production planning estimate how much capacity will be available. Okay, one day before, decide at which unit to be run at what output levels. And the main aim of this short-term planning is to minimize the generation cost before placing the market bid. Say for example, generation cost, if you reduce, automatically your bidding cost also will be less. So that's what this generation company is also doing. So short term, because if you know the demand, and you know the resources, and who are the market participants, based on that you can bid also, such that you can win the market. Okay, whoever win the market, they'll get more profit. Okay, so not in the, say for example, I am bidding for 5 rupees. Somebody X or Y bidding for some 550 paise and 6 rupees, like that. Who will win the market? Who are bidding low? So I will only get the contract. I will only run all my generators. So you will be like you will be in the loss if you are not run your generator. You will be in the loss. So that time you need to decide in the wise manner. Next is load and price forecasting. So you need to predict the electricity demand for the next day and forecast the day ahead market and market clearing price also. Based on that, you need to generate. So accurate forecast should be there, and better bidding should be there to make your higher profit rate. Next is a reserve market participation. Say for example, reserve market. If you go to the reserve market, the primary and secondary reserves are there. Say for example, so suddenly happens means what you need to do, okay, and long term happens what reserve generators you need to operate or not, like that you need to plan. Next is gencos is paid off for keeping some capacity available for emergency. So gencos are also paid off. Say for example, they are using they are generating the power using that reserve power. So reserve power also they need to pay because they are also in the market. No, always they are in the market. That is called spot market. So they are also operating. They are also having some workers, employees will be there working, and so they need to pay their salaries also. So you need to always pay that this spot market for some small amount. Okay, such that they'll also generate. Even if you want more, they will also help in the emergency time. So that this independent system operator that they need to maintain. Okay, they need to maintain this one. Okay, next is day ahead market. So day ahead market also same thing. So previously we have seen about the short term planning for weeks to days. So here it is day ahead market, one day before. So this is for one week. Okay, this is for one day before. So strategic bidding. Okay, so submit the price quantity bids for every hour of next day. Okay, so sometimes peak hours you can bid, you can charge more, and non-peak hours you can charge less, like that. That also you can plan. Okay, one day before you can plan. So if say for example some peak hours it is rising, demand is rising. So that time whatever the cost you can charge, then retailers will buy for that. So that is also you need. Next is market operator accepts the bids from the lowest to highest price until the demand is met. So that is also there. Next, Genco's aim. What is the main aim of the Gencos is to maximize the expected profit. So strategically, they need to plan, and bidding also can be done accordingly. So carefully, you need to do the bidding. Then only you can survive in the market. Otherwise, you will be out of the market. So that thing you need to plan. Next, unit commitment review. So, the commitment. So, which are the units to be committed? Which are the generating station that to be operated to meet up the demand? That also carefully you need to plan. If you plan for a highest cost, say for example, thermal generators are there, hydro generators are there. So, you need to always use the hydro generators only, because thermal generators, if you utilize, you need to bear for the coal price charges. So that also, so strategically you need to plan such that your profit you can increase your profit. So that time, the peak time, you need to use thermal generating units. So that is no need. There is no need of thinking. But in the non-peak hours, you need to plan start in the strategically such that your profit might be increasing. So next is and also the fuel planning, capacity planning, fuel, say for example thermal. If you take the coal, it should be available. Okay, this much metric ton of coal is available, that you need to ensure. Then only you need to go for the this plan. Okay, next is yeah, adjust the internal schedule. So sometimes the schedules also can be adjusted based on this fuels. Okay, that also commitment review you need to make for making this more profit of the generation companies. This thing all about the generation companies. Okay, so if you are planning for to start up a small startup, or all about the generation companies, you have to make all these things into mind, and you need to strategically you need to start the startup. Next is intraday and real time operation. So our again to real time. So intraday means, say for example, whatever, say modify the early commitments. In between the days, there will be some forecast errors will be there. You will forecast the demand up to 100 megawatt, but by the time the demand will be 110 megawatt. So generally, you need to go for more generation only. So if the demand is 100 megawatt, you need to go for 120 megawatt. then only you can manage that particular demand. Okay, you should not exactly generate. Next is unexpected breakdowns might be happen due to some fault. So that time suddenly you need to turn on second generator or third generator, like that. You need to keep the backup generators in service. Next is renewable output changes. You will be expecting the renewable energy of this much megawatts, but suddenly due to some fault, automatically this renewable or due to the climatic condition, wind velocity is low. Sometimes you can't able to operate your wind turbine. That time you will be in the loss. That is also you need to take. Next is buy or sell the energy within the intraday market to manage. So you need to go for the spot market within that day, some 2 hours. You need to immediately go for the spot market, and smart market they will be charging more, but you need to maintain the reliability, no? So because you given the contracts in the bilateral contract model, so that time you need to manage that one. Next is self balancing. So fine tuning this generators just before the timetable. Say for example, thermal generators. If you want to generate the power from 9 a.m. in the morning, you need to start your thermal generators from the 6 a.m. itself. 3 hours it will take to get the maximum generation. So that is also you need to fine tune. By the time any fault happens, you need to change the generators. Okay, backup generators you need to change. Next, what is this main aim of this cell balancing? Is to minimize the imbalance penalties charged by this independent system operators. Okay, some imbalances will be there. So if the imbalance is there now in the generation, automatically you will be charged with the penalties from the independent system operator, because independent system operator always will be watching you. Okay, it is like a regulatory commission. It will be always watching you, whether reliable supply you are giving or not. If you commit, you need to give. That's all. If you commit for 100 megawatt, you need to give. Otherwise, you need to get some from smart spot market also, and you need to give. That's all. Next, participation in the balancing market. So offer the flexible capacity to the independent system operators to maintain the real-time balances. And GENCOs are paid for responding to independent system. In the very interesting thing in this restructured power market is whoever bidding low, okay, whoever bidding low, that least cost generators will be always rewarded in this market. Okay, least cost generator is always rewarded in the market. So this TSOs is nothing but transmission system operator. That is one entity is called transmission system operator. That is one entity is called independent system operator also. So independent system operator is different. Transmission system operator is just to ensure whether the transmission is happening properly or not. Otherwise, this transmission system operator also will be you need to pay the penalties whatever they suggested, like power factor tariff, penalty tariff you are paying, no, the same thing like that. So here offers the flexibility capacity to help this transmission system operator to maintain the real time balances. And also GENCOs is paid for responding to the transmission system operator dispatch instruction. So transmission system operator will give the dispatch schedule. So based on that, generation generated should be happening. So that also you need to take an